Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. So today, I want to talk about 5 lessons to be learned from Donald Trump's allegations of tax fraud, okay? So over the last few days, the New York Times broke this story about what seems to be allegations of tax fraud from back in the 90s with Donald Trump and his dad. So I really want to talk about that, to talk about the lessons that are in this so you really know what's going on and what to look for. All right, number 1. First is the difference between tax avoidance and tax evasion. Tax avoidance is legal. Tax evasion is not, okay? So in this particular case, they're alleging that Donald Trump undervalued assets, which would have reduced his tax liability, or overvalued some expenses, which would also reduce the tax liability. Those things are illegal. Deferring your taxes is a type of tax avoidance. That is legal, but undervaluing assets, overclaiming expenses, not claiming income, all of those are tax evasion type things, and it's illegal, just period. No ifs, ands, buts about it. So just know the difference between those two. Number 2, there is no statute of limitations on fraud. You know, when people ask me all the time, hey, how long do I need to keep my tax stuff? And I say till death. This is why. Because in the event that something happens, and let's say the IRS says, hey, something you're doing doesn't look right, we think it's fraud. If you can't prove yourself innocent, but they can prove that you're guilty, guess what? You know, you're going to pay up and possibly go to jail. Okay. So this is why I tell you to keep your tax documents, keep your documentation until you die. Right? Because I guarantee you these tax returns that they're looking for, somebody's going to find them. Okay. For real. But there is no statute of limitations. So that whole, the IRS can only go back and audit 3 years. In the case of fraud, that is the exception to the rule. They can go back until, and if there is an issue of fraud, and let's say that they find out, hey, way back in the day that he didn't pay taxes on, let's say, $1 million. Well, if that bill goes from the time the tax was due until now, right? Until whenever they assess the penalty. Okay, so it's not just, they can only go back 3 years, but if they can go back and find that you did something fraudulent, they can go back. I mean, like, seriously, until during their research, let's say they're like, this happened in the 90s, but they figure out that he might have done something in the 80s. Well, then they can go back to the 80s. So when it comes down to fraud, just know that there is no statute of limitations. And this is why I say keep all of your tax documents, keep your supporting documentation, so that in the case that you have to prove your innocence, then you're able to do that. Number 3, when it comes down to these things, especially when we're talking about taxes, you have to know the relevant tax law. We just went through tax reform that's, really a lot of it is taking effect right now in 2018. And, you'll see that when you start filing taxes in the 2019 year. But you have to know the tax law from the specific time the tax return was filed. This is why it's so important to hire competent help to help you deal with these things, because what may be illegal now may not have been illegal back then, and vice versa. What may be legal now may have been illegal at the time. So you have to know what relevant law applies to that particular tax return. Okay. So, get competent help, but you have to know the tax law. And like I said, this is especially relevant now because of tax because of tax reform. So, what you were able to do in 2017, you might not be able to do in 2018. And that's going to catch a lot of people by surprise, right? So especially when you're, dealing with tax professionals need to know when those laws changed, what the relevant tax law is for now, then, and whenever, to be able to effectively service your client, okay? Number 4, just like I said, keep your stuff, okay? Keeping all of your tax returns and documentation is a very small price to pay to be able to effectively deal with the IRS. Even if you put everything in a manila envelope, if you file taxes for 50 years, well, that's just 50 envelopes of stuff that you need to have. Again, it's a small price to pay, but there's so many other ways to keep your stuff. You can scan these documents in so you're not keeping particular paper or whatever. There's a lot of things that are available now that really weren't available back then, right? For you to be able to do that. So however you do it, you need to be able to save your tax returns and be able to put your hands on the tax returns in the event that something, those returns are called into question. And hey, if that never happens, it's just an insurance policy. That's what insurance is. Insurance is there in case some stuff happens. But if some stuff happens and you don't have that insurance, okay, then we got problems, right? So keep your stuff. And number 5, the other thing that caught my eye in this, in reading this New York Times article, which is, I think is like 39 pages or 39, 40 pages. Okay. The other thing that caught my eye is that Donald Trump is alleged to have created this sham company, okay, to where, dad was funneling cash through this sham company and getting money to Donald and his brother Fred and one of their cousins or something, okay? But it's the sham company that caught my eye because I told you guys about this this post that's going around Facebook talking about, create an LLC for your high school kid and file taxes on it and all that, okay? That is fraud. Filing taxes on a company that does not exist, that is not actually performing the service that it is supposed to perform is fraud, okay? Even if you file $0, it is still fraud, okay? That's the important thing that you need to know. And so this is a prime example of how, using a sham company, if it's proven to be a sham company, that's fraudulent, and that's going to be some money that needs to be paid back. So, so y'all know I'm watching this, right? Like, oh my goodness, let's get the popcorn. The tax law is about to be on and popping. But, but it's the lessons that are in these huge cases, and people don't think that, stuff like what happened to, the rich, to Donald Trump and all, those types, that it doesn't happen to common people. When the truth is that it really does. You just don't hear about it in the news because it's not a high profile type thing. Until, somebody goes to jail, then it hits hits the tax news network that somebody went to jail for something crazy. But other than that, you really don't hear about it until you hear about these high profile cases. But these are the things that you need to do to be able to protect yourself, right? This is why I say you prepare every return like you're going to be audited and you know it. Don't claim stuff that you're not supposed to claim. People, can push the envelopes. There are tax lawyers that push the envelope with expenses all the time and, claims and, tax benefits and tax shelters push the envelope all the time. But there is a fine line between tax avoidance and tax evasion. And that's going to be the fine line of legality of you being able to go home or you going to jail. Okay, or you're going to have to write a really big check back. Okay, so those are like the 5 things to take away from this. I'm going to be watching this as it unfolds because it's the tax law that is that's important here. Like, I have to share that. Like, this is not, we're not talking about politics. We're talking about taxes and the application of the tax law to make sure that you understand. Like, one of the headlines that I saw that I thought was very misleading and I didn't like, and it was saying that that Donald Trump received the equivalent of $413 million in today's dollars. Well, so what if that's the equivalent in today's dollars? What was it back then? And see, it's that kind of stuff that's misleading that you really have to read and catch. What was the value at the time? Like, I don't care what it was worth in today's dollars. Did he get a check for $413 million today or back then? Okay, then let's talk about that. But I don't want to hear about the whole what is the today's equivalent. That's some misleading stuff and takes you away from the facts of what's really going on here. So that's an additional aside. Okay. So listen, thank you guys so much for tuning into Home Biz Tax Talk. Listen, if you have not filed your extensions, reach out to me and book a consult, www.homebiztaxchat.com, so we can get you taken care of. All right. Have a great day, and I'll see you next time. Bye.